Personal loans are borrowed funds that can be used for a variety of purposes, such as significant expenditures, debt consolidation, emergency needs, and so on. These loans are repaid in monthly payments over a period of a few months to many years. It may take longer depending on your circumstances and your payment diligence. Do you know how personal loans work? If you are authorized for a personal loan, the funds will be deposited in one amount into your bank account. Depending on the lender, the transfer could take as short as 24 hours or as long as a few weeks. As soon as the loan is disbursed, you must begin making monthly installments. Find the best personal loan for you and get pre-qualified loan offers in less than 2 minutes with no impact on your credit score. Please check the description below to get more information. Most personal loans have fixed interest rates, which means your payments will remain consistent month after month. Personal loans are typically unsecured, which means there is no collateral supporting the loan. If you do not qualify for an unsecured personal loan, you may have to utilize collateral, such as a savings account or certificate of deposit, to be accepted. You can also ask a friend or family member to co-sign on your personal loan in order to increase your chances of approval. Personal loans are frequently less expensive than credit cards, and they are funded more quickly than home equity loans. Here are the top 9 reasons to take out a personal loan and when they are acceptable. Number 1. Debt consolidation. One of the most typical reasons for taking out a personal loan is to consolidate debt. When you apply for a loan and use it to pay off various other loans or credit cards, you combine all of the outstanding sums into a single monthly payment. This debt division makes it easier to determine a time frame for paying off your bills without being overwhelmed. The lower interest rates are one of the most significant benefits of obtaining a personal loan to pay off your credit cards. Lower interest rates allow you to cut the amount of interest you pay as well as the time it takes to pay off the debt. Number 2. Alternative to payday loan. If you need money quickly, taking out a personal loan rather than a payday loan could save you hundreds of dollars in interest rates. The average APR for a payday loan is 391%, according to the Federal Reserve Bank of St. Louis, whereas the maximum interest rate on a personal loan is normally 36%. Payday loans have short repayment terms, usually between 2 and 4 weeks until your next payday. Borrowers frequently struggle to return their loans on the due date due to the rapid turnaround time. Borrowers are frequently required to renew the loan, which adds the accrued interest to the principal. This raises the overall amount of interest owed. Personal loans have longer terms and typically cost the borrower significantly less in total interest. Number 3. Home remodeling. Homeowners can utilize a personal loan to improve their property or execute critical repairs, such as plumbing or electrical wiring. People who do not have equity in their house or do not wish to take up a home equity line of credit or home equity loan may benefit from a personal loan. Personal loans, unlike home equity loans, are frequently unsecured and do not need you to use your property as collateral. Number 4. Moving costs. A local move costs $1,250 on average, whereas a long-distance move costs $4,890. If you don't have that much cash on hand, you might need to take out a personal loan to cover your moving costs. Personal loan cash can assist you in moving your household belongings, purchasing new furniture, transporting your automobile across the country, and covering any other charges. If you're going somewhere without a job, a personal loan for moving expenses can help you stay afloat. You can avoid emptying your savings or emergency fund this way. Number 5. Emergency expenses. If you have an unexpected expense, such as paying for a loved one's funeral, a personal loan could be a low-cost choice. The median cost of a funeral is $7,640, which is out of reach for many families. Surprise medical expenditures are another typical cause for getting a personal loan, particularly if your doctor expects full payment. You may require a personal loan to pay sudden medical bills after negotiations with the hospital, doctor, and insurance provider. Number 6. Large purchases. If you need to buy a new washer and dryer or replace the transmission in your car but don't have the money, a personal loan can help. Personal loans enable you to cover large automotive repairs or acquire big household equipment and electronics right away, which is especially useful if you require your car or those appliances on a regular basis. Though you'll have to pay interest and sometimes upfront fees, a personal loan can save you time and money in the long run by allowing you to avoid using laundromats, rental cars, and other expensive short-term alternatives. Number 7. Vehicle financing. A personal loan is one option for financing the purchase of a car, boat, RV, or even a private jet. It's also one way to pay for a vehicle if you're not purchasing it directly from the manufacturer. For example, if you want to buy a used car from another consumer, a personal loan will allow you to do so without emptying your savings account. Number 8. Wedding expenses. In 2022, the average wedding cost $28,000. Couples who don't have that kind of money can use a personal loan to cover the fees and repay them later. A wedding loan can be used for large ticket goods like the venue and the bride's gown, as well as lesser expenses such as flowers, photography, the cake, and a wedding coordinator. If you don't want to ruin your savings account, consider taking out a personal loan to help you plan the perfect engagement and wedding. Number 9. Vacation costs. A typical vacation may not involve taking a personal loan, but what about a honeymoon or a luxury cruise? Personal loans can help you finance your dream holiday, whether you just graduated or are celebrating an anniversary. However, remember that you will be paying interest on that loan long after your vacation. Do you know how to get a personal loan? If you need a personal loan, you should shop around for the best interest rate. Begin by applying to your present bank, then to online lenders, local credit unions, and other banks. Most lenders will let you become pre-qualified, which will let you examine your possible interest rates and terms before you apply, all without a hard query on your credit report. In addition to interest rates, you should evaluate loan terms and costs. You'll submit a complete application with your loan details, personal information, and income verification documents once you've found a lender you prefer. A hard query will be made on your credit report as a result of this. Most lenders consider this phase of the process to be quick. If you submit all relevant documents, you may be able to receive your funds in a few days. Our final thought is that at the end of the day, a personal loan can be used for absolutely anything, which is why the term personal. Remember that the loan must be returned at a certain point, regardless of the circumstances. When you take out a personal loan to pay off debts or plan the perfect wedding, you are borrowing money that must be returned with interest. Personal loans are an excellent method to consolidate debt and make large purchases, but you should always use them properly.